I'm not better than the next trader, just quicker at admitting my mistakes and moving on to the next opportunity.
I think Canada would be much better off being a 51st state because we lose $200 billion a year with Canada. Why are we paying $200 billion a year essentially in subsidy to Canada? And look, we're not that rich right now. We owe $36 trillion. That's because we let all these nations take advantage of us. Same thing, like $200 billion with Canada. We owe we have a deficit with Mexico of $350 billion.
I find this very odd that Trump is talking about the same things that are happening in the world of tokenization. You see, he comes out and pushes extremes and then works his way back as negotiation leverage. And he's doing this right now with Canada, Mexico, China. You may remember the first time that he was in office, he started trade war with China. And almost to the next election, there was a ceremony where Chinese officials came and signed some document. But the reality is the tariffs never dropped. Biden gets in, he keeps the tariffs. The trade war just continues to escalate. And what we're seeing out of the BIS and other banking institutions is there needs to be an overarching ledger that connects jurisdictions. So it's very in line with the trade war. There's the rules of tokenization is being embedded. It's being embedded into the technology itself, into the ledgers themselves. And they're creating allies or creating networks where there is an overarching ledger that everybody can trust. Seeing this with the Western Alliance, the G20, with the BRICS nations. And this is a very important piece to our future.
Well, let me assure you that 11 out of 10 Canadians would rather trade their Trudeau pesos for American dollars. They already have American dollar accounts. Trudeau has wiped out 41% of their net worth in the last 9 years. They want an economic union because it's good for business. Everybody understands that. The two countries are so intertwined, and they both believe in democracy and free speech and freedom and all the rest. And they fought in all the world wars. It's the beginning of a negotiation.
Yeah, but wait, what can President Trump get for the American consumer and the American voter in return for these tariffs? What can the American voter get?
Complete independence and security on energy. Alberta has 5 times more oil and gas than the entire United States. Complete security on uranium, aluminum, all of the incredible resources Canada has with only 41 million people there, and access to it in a free flow, no tariffs. And that would become a behemoth, huge economy.
It's the beginning of a negotiation. And what that negotiation is jurisdictions that have similar goals, have similar values and interests are going to get together and create networks for trade. You're going to see this happen with the central bank digital currency projects or tokenization project, modernization of correspondent banking. All of these different projects include jurisdictions that can all trust each other to a degree for these different overarching ledgers that connect everybody. So anything that happens with trade, any manufacturing, the inputs, the outputs, shipping, insurance, all of those different entities are going to have to participate in networks where everyone can have some degree of trust with each other. Canada, Mexico, United States, falls underneath the NAFTA agreement. They've had free trade for quite some time. Mexico is one of our largest trading partners. Canada ships us the majority of our natural resources, and there is an abundant amount of natural resources in Canada. So the winning deal is cooperation, but there seems to be some kinks in the hose, so to speak. Those kinks will iron out, and eventually we'll have a more efficient engine to trade.
Are really the prime cases where you can harness tokenization to have efficiencies. But if you think about those kinds of operations, there are many, many moving pieces and many dependencies. That means that as soon as you have a set of players that you need to bring onto the platform, you can immediately think, well, there are half a dozen other players we need to bring on as well. With supply chains, it's not only the shippers and the bankers who have the letters of credit and so on. Think about the warehouses and then the official sector as well. And then as soon as you have a set of players that you think would be sufficient, think, we forgot about X and Y, so we need to bring them on. And then if you have X and Y, for them, there are other players whose actions are going to be important. Same thing with real estate. There are many steps involved in the conveyancing process, and it's going to be very, very challenging to pull this off.
The majority of tokenization projects that you see coming from big banks are multi-layered approaches. And what that means is there's certain networks that are private permissioned, and then it moves all the way down the spectrum to public open chains. And the public open chains are going to bridge all these different, not walled gardens, but almost open gardens together. You're going to see these open gardens form around allies, form around the G20, form around the BRICS unions, and those different groups will be able to freely trade with one another. But when you move out of those groups, that's where you're going to see the open public chains like XRP distribute value from one network to the next network.
The most talked about application of this is in the case of securities markets, which has to do with payment versus delivery. So I would like to sell a security and receive money in return. The buyer would like to buy the security but pay in return. There could be settlement risk, which is, given the sums involved, that could be very, very important. And we would like to mitigate that settlement risk. And one way of doing that is to write a program that says the money goes out if and only if the security comes in. And that's that's the canonical example of how you can use the contingent performance of actions in mitigating risk.
The banking industry has a lot of risk that they are absorbing on behalf of their clients, and this is where fees come in. And a lot of times you see fees with cross-border payments, but you'll also see fees with securities settlement. And the fact that the buyer and the seller need to agree on a certain price, but the buyer actually has to make good on the purchase. If they don't, then the bank is stuck holding the bag. So having actual settlement risk is embedded in securities transactions. And what would happen if we saw securities become tokenized and available on public chains? Well, we saw RChax, which is a CSD, say that they were going to issue different security tokens on the XRP ledger, the Hedera Hashgraph, the XLM ledger, Ethereum, Avalanche. So they picked an array of different blockchains. My position is it's up to the customer, but there has to be a bigger play at stake with this news. There has to be a global exchange where market participants such as buyers, sellers, market makers all come together and figure out the prices of different securities. Because if it happens in a vacuum, chances are there's going to be a huge arbitrage between the New York Stock Exchange and the securities that RChax has.
Action. The problem is that, this kind of system is virtually unchanged since the days of the Bank of Amsterdam. So correspondent banking grew up in an era where you relied on the trust of the intermediaries, and the payment system was just the flip side of the trade relationships that existed between merchants. The problem is that we have now grown well beyond this, especially given the compliance requirements. So AML, KYC, all those requirements have been layered on top of a set of institutions that were not designed to handle that kind of burden. And that means that correspondent banking has really been retreating. Now, what Agora tries to do is to say, well, rather than have these payments sequentially, why not just harness tokenization? This is going well beyond payment versus delivery. Why not harness tokenization and have all of these account updates happen at the same time? Just one update all the way through, and because of the programmable nature of the platform, you can harness the latest AML KYC utilities that use privacy preserving techniques to do the compliance checks all the way through.
Correspondent banking today is almost decentralized. It's set up with these centralized banks that have their own balance sheet and have to work off of assets and liabilities of partner banks. So, in a sense, it's decentralized because all of the banks are different entities and they have their own balance sheets. Now, what the BIS is trying to set up is something called a unified ledger. I have read that this originally came from the regulated liability network. It's a different iteration. The design was taken from, of course, Quant's Overledger network. And what the Overledger network is it has APIs that speak between different systems. The Overledger is an overarching ledger that has API calls into the private permission systems, into the open public systems, and can make one large ledger that accounts for all the assets between all different networks.
Different ways by the Bank for International Settlements, by the International Monetary Fund, and it originated even with the private sector initiative, the Regulated Liability Network. Do you see that as a good idea, an obvious way forward?
I do, and having a lot of experience in banking and payments as well, what we see occurring is that there will be a common interjurisdictional settlement network, and that needs to happen as an overlay to the different systems that are being developed. So what will happen is each jurisdiction will either create their own or plug into a nearby settlements network that is being developed, and it could be sovereign, it could be regional, it could be by institution. I mean, one bank might have their own, for example. So what will happen is you plug into your nearest connection based on your need. You either do it yourself, you work with your peers and you co-build and co-design what that looks like, or if there's one that's existing, the way we've got it today in payments, you could connect to an agency bank and they onboard you to the network. So we're going to see that same approach and that same adoption that's going to happen bottom up in terms of domestic jurisdiction connectivity, then up to regional. And then from the regional, you'll have that common layer between the different regions, which is where that settlement network comes in. And yes, there's opportunities to explore mBridge, RLN, and others. And it makes sense for banks to do that because they all have a say. They have the experience and the connectivity of past networks to bring to these new types of networks. And it gives them a common way to interoperate without forcing something proprietary. And it gives them the ability to do it themselves, work with peers, or just connect, outsource that to.
So he uses the phrase a common interjurisdictional network. Now, what does that mean? That means several countries that all have similar types of beliefs and values all get together, create a network for trade, and that is interjurisdictional. US, Canada, Mexico, they all join a network, and then there's rules baked into this network. And the KYC, AML, well, guess what? That's why Trump is labeling cartels as terrorists. Because all of the Mexican government officials that have taken payments from cartels, now the US government can go after those people. But I digress. You see, a lot of the projects that came out of the Federal Reserve for international cross-border payments, the regulators have nodes on these networks watching everything for KYC AML, as well as the private sector creates nodes for whatever they're trying to accomplish. And then fintech providers will be able to get access and they would be able to provide services. And the real use cases with crypto assets would be to kind of glue all of these regional networks together. So think of one for the EU, think of one for the Middle East, think of one for just trade partners in general. There's going to be a US-China one, right? That may have more scrutiny than something like the US-Canadian network.
So there is this trade-off in that the bigger the potential benefits, the harder it is to actually make tokenization work. I think one of the things that we've learned looking at this issue is that the most promising use cases are those cases where the applications have to do with the update of account ledgers. And correspondent banking is the classic case, but the securities market is also very, very close because centralized securities depositories, or CSDs, are also account ledgers. If you can have the updating of the accounts interlinked with the payments, that's going to give you a tremendous efficiency gain in terms of capabilities.
How do stocks continue to go up in value? Well, people need to purchase them. And the median net worth of a 40 to 44-year-old in the US is only $58,000. So the middle class has been squeezed and continues to be squeezed, while the stock market is at all-time highs. So how do stocks continue to gain value in this type of environment? Well, what he's talking about by tokenizing stocks, you make stocks global when you tokenize them. So people all over the world that do not have access to the US stock market will start to have access. Now, this will bring up other things like competition, but for now, the dollar is the reserve currency. Stocks are at all-time highs. There needs to be more buyers. The way to do that is getting more people to buy the stocks. There are no solutions. There are only trade-offs. Thanks, everyone. I hope you enjoyed the show. Please take a moment to like and subscribe. If you enjoy content like this, please consider joining my Patreon or my Ghost channel, dmjr.ghost.io, to watch all of these videos ad-free, have exclusive access to a weekly chat, Twitter chat, research, and much more. So please be sure to check it out at patreon.com/fame21more or dmjr.ghost.io.